Welcome to The Explainer. We're going to tackle a question today that I'm pretty sure every single one of us who uses online banking has asked at some point. All right, let's get right into it. Think about it. You open your bank's app and boom, your balance is right there. Instant, no fuss. But then, the second you try to send some money to a friend for the very first time, it feels like you're suddenly filling out paperwork to launch a rocket. So what's the deal? Let's pull back the curtain and see what's really going on. And really, what this all comes down to is this fundamental tug of war that every digital service has to deal with, but especially banking. It's this constant balancing act, right? Between making things super easy for you and keeping your money completely locked down and safe. On one side of the scale, you've got convenience. You want speed, you want to check your balance, pay that bill, and just move on with your life. But on the other side, that's security. The bank has to be absolutely 100% positive that the person moving that money is you and not some scammer. And that takes verification. Now, this whole balancing act isn't just something your bank cooks up in a meeting. Nope. There are actual rulebooks, master plans laid out by financial authorities. In Taiwan, for example, they have this big official document that basically sets the standard for all e-banking security. Let's break down a couple of the key terms you'd find in the rulebook like that. Okay, first up is something we've all seen a million times, the OTP, or one-time password. You can think of it as a key that self-destructs. It's generated for one single action, you use it, and poof, it's gone. That makes it way, way more secure than a password you use over and over. And then you have 2FA, or two-factor authentication. This is like needing two different keys to open a safe. It's a combo of something you know, like your password, with something you have, like your phone buzzing with that code. When you need both, it becomes so much harder for anyone else to get in. These rulebooks get super granular about your data too. They classify everything into different levels, from public stuff like interest rates all the way up to super sensitive info like encryption keys. And this is really, really important because the type of info being touched directly dictates how strong the lock needs to be. All right, so with that in mind, let's look at the actual digital security toolkit your bank has at its disposal. We're talking about the specific methods they use to prove you are who you say you are. And it's a lot more than just your password. And here's the real key to understanding all of this. Every single one of these security methods is given what's called a trust level. It's literally a ranking from lowest to highest that tells the bank how confident it can be that it's actually you making the request. And this table here lays it all out perfectly. You see your everyday password? That's got the lowest trust level. It's fine for just looking at stuff, but want to send money to a new person? You'll need something with a medium trust level, like that OTP we talked about. And for the really high-stakes stuff, like massive transfers, that's when you bring out the big guns, the highest trust level tools, like a digital certificate, which is basically a super secure, encrypted digital ID. And that right there brings us to the heart of it all. The tool the bank makes you use isn't random. It depends entirely on the risk of what you're trying to do. See, not all transactions are created equal in the bank's eyes. Yeah, check this out. It's a perfect illustration. Low-risk stuff, that's you checking your balance, paying the same utility bill you pay every month, or moving money between your own accounts. The money isn't going anywhere unexpected. But high risk? Oh yeah, that's sending a big chunk of cash to a brand new account. The potential for something to go wrong, for fraud, is way, way higher, so it needs way stronger proof. Okay, let's make this super practical. We're going to walk through a tale of two transfers to see how this all plays out in the app you use every day. All right, scenario 1, the low-risk transfer. Picture this. You're just paying your monthly phone bill. It's a small amount, and you're paying it to a company you've paid tons of times before. Easy peasy. And the process reflects that, right? It's lightning fast. You log in maybe with your face or fingerprint. You tap on the saved biller, glance at the amount, and hit confirm. Done. Why so simple? Because it's a pre-agreed low-risk payment. Your basic lowest trust level login is more than enough security for this. But now, let's flip the script completely. Scenario 2, the high-risk transfer. You're sending a pretty hefty sum of money, say over the NT dollars 50,000 threshold, to a friend you've never sent money to before. And boom, look at the difference in the process. Because this is a non-agreed transfer and it's over that critical limit, the system slams on the brakes. After you log in and punch in the details, it stops you and says, hold on a second. It demands that second factor, that medium trust level OTP sent to your phone. It needs that extra layer of proof before it's going to let that money go anywhere. So after all that, what's the big takeaway? Why does this whole system of layers and risk levels and trust scores, why does any of it actually matter to you? Well, it's because none of this is random. It's a really smart, deliberate trade-off. The whole system is designed to give you total convenience for the simple, everyday stuff, while automatically ramping up the protection when your money is most vulnerable. Those extra steps aren't a hassle. They're your personal digital bodyguard, stepping in only when they're needed. So, the next time you're staring at your phone waiting for that 6-digit code to come through, just remember what's really happening. Those extra few seconds aren't there to annoy you. They are the digital tumblers clicking into place on a very, very secure vault. And it's your money that's inside. And that kind of leaves us with one last thing to think about. We've just broken down how today's system works, but we all know technology doesn't sit still for a second. As threats from things like AI get more sophisticated, our banking security is going to have to evolve right alongside it. So what will that next generation of security even look like? That's a fascinating question for another day. Thanks for joining us on The Explainer.